2025 is barely 1 week old, and already we are seeing dramatic changes in the landscape that are going to affect Vancouver real estate moving forward. The Prime Minister, well, he's quit and he'll be out of power later this year, which opens the door to potentially radical change within our country, with obviously a new figurehead that will unquestionably have a different outlook and different policies when it comes to housing in Canada. Trump, of course, is going to be taking office later this month and will potentially enact tariffs and other, such policies that will have an immediate and likely lasting effect on Canada, especially when it comes to GDP, things like lumber exports, and our unemployment rates. The effects will ripple through Canadian and Vancouver housing markets. They will be felt. And immigration numbers, of course, we're seeing they are dropping rapidly, which is going to affect things like our rental rates, our investments, our GDP, and then housing prices. So today we have a fun episode for you. We are looking at all the factors that affect housing, and we'll share our predictions for what will happen with Greater Vancouver home prices and the housing market in 2025, both economically and of course with direct housing data. So let's dive right in. Starting with the economic drivers that will shape the year ahead, our predictions start off with the R word. Are we going to see a recession in 2025, right? We kind of both thought we'd see one last year. And again, this is defined by the government. This is not per capita GDP recession, as we are already in, but a recession defined how the government does it, which they currently claim we are not in. So will Canada go into a quote unquote official recession in 2025? I'm going to start off myself with this one, and I'm going to say yes. I think our country is trending absolutely towards a official recession that will begin in Q3 of this year and persist into 2026. How far out, I don't know, but I think we're going to end the year in a recession that starts in Q3. Ryan, what's your take?
I don't, this is so hard to predict because the goalposts move whenever we measure whether or not we're in a recession. So understanding that, I think the government and I think the Bank of Canada will continually massage where the goalposts are so that we don't end up in a recession, not at least a technical one. And so I think that the government will continue to lower rates to try and stimulate the economy so that that doesn't happen. What are the results of that on the other side? We'll see. But I think there's growth challenges that are affecting Canada, but there's a couple reasons why I don't think we'll end up there. And I believe it's actually going to be the reverse, Dan. I think we're going to see it kind of struggle in the beginning, and then I think it'll get better later into the year as rates continue to drop into the later parts of the year. We'll find a bit more stability. We'll have some political stability. I think that could bring back some investment, especially if we end up with a government that's more pro-business. And I think there's a silver lining to our economy faltering a little bit because it's going to push the overall value of the Canadian dollar down. And if we have a weaker loonie, that improves the export business and competitiveness of Canada. So I don't think that's just going to transition into a whole new wave of business, but I think it will stave off a quote unquote technical recession. And the reason I'm saying that is because I believe the last year we've actually been in one. But again, the government and the Bank of Canada have moved the goalposts, removed those volatile items that should have otherwise said we are in a recession. I mean, unemployment suggests that we would be in a recession based on those numbers. So I think technically I'm looking at that word technically. In real time, I believe it'll feel like a recession, but I think technically I'm not convinced. With that said, we certainly need a government who will double down on exporting our natural resources for that to happen. If we can do that at a competitive rate, I think it saves Canada, but we'll see. Population growth. Let's get into that. So how much population growth is expected in Canada in 2025? So I looked at this, I went back about 5 or 6 years. Canada, if you could believe this, Canada's population is up 10% in the last 5 years. And I believe that it's Canada's outright population growth that has quote unquote staved off a recession. But if you look at per capita GDP, that's absolutely plummeted. So I think the federal government's plans to, and who knows what that's now going to be, but the federal government's plans to reduce the new arrivals, I think will effectively wipe out a lot of the population growth we've seen in the last 5 years. So I think population growth with respect to new PRs will drop heavy. But I still think we'll see population growth. I'm not in a position where I think it will be anywhere near what we've seen in the last 5 years. Is that a roundabout way of not giving you a number?
We need a number. You got to put the flag in the sand here.
I'm going to say it's going to be I think it's going to be around 300 to 400,000.
Okay. That's a dramatic drop. And I'm largely in agreement in the fact that it will absolutely be lower than it will have been the last 3 years in a row. I mean, let's be honest here. There are far fewer jobs available. There's far fewer reasons to come into Canada, right? Canada's looking politically a bit unstable right now. And of course, after all the inflation woes that we've been going through and just the sheer expense of living here has made the country less attractive overall. Right now, there's only about 480,000 jobs available, which essentially means for every 2 people looking for a job, there's only 1 available. And that's just not an environment where they're going to bring in obviously temporary foreign workers, and anybody else just looking to move here for employment. Again, less attractive than it's been over the last few years. I put my number at give or take 25,000 of 500,000. That's the number for 2025.
I think that's very reasonable, to be quite honest. And you know what else I think about population growth is I think people have been lied to. I think there was this, presumption around the world that you should come to Canada because we have jobs, we have space, yada, yada, yada. And people showed up here and they were like, it's expensive as hell. I can't buy a house. Those jobs that you told me either suck or they're not available. And so I think, people were largely lied to. And I think that word is out now. So I think it'll be harder to attract decent talent back to Canada without a pro-business government. It's just my take.
Agreed. Oh, a quick reminder too for anybody maybe new to this channel. When we decided on our predictions for the year, Ryan and I have not shared our answers with one another. So we are hearing each other's opinions on what's going to happen with the housing market and with economics in 2025 for the first time together here. So you're kind of hearing it when we hear it. So let's continue on with the economic factors that will affect housing in Canada, which of course will include the jobs market, right? What's our unemployment rate going to do? At the time of recording in here, January 2025, the current unemployment rate sits at 6.8%. And I am of the belief that things are going to get much worse in that factor before they get any better. I mean, when we look at things like the business insolvencies, they are still trending upwards. They're basically spiking, and those are going to translate, of course, into unemployment numbers increasing as time goes forward. There's been a lot of references to the global financial crisis in the last year, and the GFC unemployment peaked at 8.7% during that time. And while I don't think we are as bad as the GFC, I firmly believe unemployment is going to increase and hit 8%. We're going to see an 8 this year, and that's basically where we're going to end 2025.
Yeah, I mean, that would fall in line with your prediction of a recession. If we hit 8%, this country is in a serious problem. I think the unemployment rate is uniquely tied to interest rates because we're a super interest rate sensitive country. And when you compare it to the States, they're not so sensitive to interest rates because they're not as levered as Canadians are. I think there's a bit more elasticity in that marketplace. But I think in Canada's, I see, much like you, unemployment getting worse into the middle of the year. I think it'll crack 7 to 7.3%. But then I think actually things are going to get a little bit better as rates continue to go down. As the dollar effectively weakens, the demand for resource-based products could grow, again, with a big asterisk around whether or not we end up getting tariffed. But I think it'll end the year somewhere around 7% for me. With that said, let's look now at the inflation rate. So at the time of recording, it's around 1.9%. So where will it end the year? Well, this is a very difficult question. I largely believe Canada has got its inflation issue more or less under control, mostly because they tanked the economy in order to get there, which is why I believe we're actually in a recession. But nonetheless, here, I see us ending somewhere around 2.2 to 2.5%. And that's because I largely believe what's going to happen in the States is going to be inflationary policies that are going to get driven. So, they have the bandwidth to increase inflation and not be so sensitive to it, much like we are. But we are effectively quite a bit lower in terms of where we are with our interest rates. So, there's divergence. There's only so much more that we can lower. But let's be honest here. One stat that I did pull up, which I thought was super interesting, is that the reality is that households in Canada, when you exclude electronics and when you exclude automotive, most of consumer goods that get imported into the average household are about 10% of that household spending in any given year. And so my point really is that disinflationary pressures from a broadly softer Canadian economy will be larger than the inflationary impulses from a weaker currency, if that makes any sense, when you import goods into the country. So I think we've got bigger problems here than we would necessarily have from importing inflation.
Yeah, I think the risks for inflation increasing this year is, of course, the weak dollar and us ultimately importing inflation through having to buy things like our biggest trade partner, buying US goods at a much higher rate. And also with rates coming down and businesses starting to stimulate, it won't happen till likely the end of the year, if at all this year. But, we're going to start to see some business growth there as well, which could start to feed people and, in complete contradiction to my unemployment rate, start to have some discretionary spending. Ultimately, I'm pretty close to you, Ryan. I do think, obviously it's going to bounce up and down throughout the year. I pegged it at 2.2 by the end of the year. So it'll increase a bit, but I think we're in a largely stable inflation rate year. Mm-hmm. To be seen, of course, but as of right now, it does feel pretty stable with infinite factors as there always are on either side of this. But yeah, 2.2 is my number for the end of this year. Mm-hmm. So next up is the Bank of Canada and our overnight interest rate, right? Right when that follows inflation is what's going to happen with the interest rate. Based on today, I'm kind of going with the markets, even though the markets only project 3 to 6 months out as well. I am of the belief that, first let's share and remind people today we're at 3.25% overnight rate. I think there's going to be throughout the entire year only a total of 3 cuts of a quarter point each. And that's it. I'm not going to try and say the months, but we are going to end the year at 2.5% overnight rate.
I got this horribly wrong last year. So I was very cognizant of my own biases when I was doing this one. But honestly, Dan, I'm right there with you. I said I believe we'll see an interest rate at the end of the year hovering around 2.5 to 2.75. And I think that'll largely be impacted by the labor market. So if labor markets look good and employment comes down, then I think we'll be fairly stable with the interest rate. Though if it's not, and we find ourselves in a recession, it could be more aggressive. But we'll see. Having said that now, the next thing that follows, obviously, Bank of Canada interest rates are mortgage rates, both variable and fixed. And so the question is, where will variable and fixed rates be at the end of 2025? So for me, I believe variable will continue its path down. I think it will usurp the fixed rate as the leading choice in 2025. As interest rates continue to come down, I think banks will be forced to look at that. And so I think the variable rate will end the year somewhere around 3.75. And I think the fixed rate will be quite a bit higher at 4.5 to 4.75.
Interesting. Okay. Well, let's also set the metric here. Variable today, 4.45 average. Fixed today, 4.09 average, right? Those are attainable rates today. Because I obviously said the 75 bips of cuts in the year, that puts my variable at 3.8, very close to Ryan's. But the fixed rate is going to be just slightly above 3.9%. So the two will converge this year, and then variable will move as the front runner, again being the lower rate option, as it is for 87% of the time. Historically, variable rate will be lower, and we're going to see that come into effect again later in 2025. This is a new one. We did not have this metric in our forecast last year, but I think it's an important one, and that is the mortgage arrears rate. This is something that, of course, as we go into 2025 and 2026, when approximately 50% of all mortgages are renewing, is there a mortgage renewal cliff where all of the world is going to implode, apparently, say the pundits? Today, the mortgage arrears rate in Canada is 0.21%. We are still below where we were pre-pandemic at 0.25%. This is going to go up. There is no doubt about it. Arrears are increasing across the nation and have the potential to increase further. It's not going to increase to a level that's going to cause any type of major bank or financial stresses at that institute level to the point where they're going to collapse or see a few close. It's just not going to happen, but it will go up. So again, 0.21 today. I predict by the end of 2025, the arrears rate in Canada will be 0.28%.
That's very close to me. I came in at 0.26. And that's my rosy-colored optimistic glasses that people will figure out how to pay their mortgage. And like I said before, with some of these other questions, I think it really largely depends on the performance of the labor market. If people lose their jobs, they're not going to be able to pay for their house. So that becomes a problem. However, if interest rates get low enough and businesses can begin to reopen, become competitive again, people can keep their jobs, then I don't think it'll be as bad as we're predicting, or as bad as what some of the pundits have been predicting. So yeah, I think there's a large wave of renewals coming, but I think with interest rates getting down to that 2.75% range, I think it'll give people some options, and I think banks will be working with their clients as well, because we both know banks do not like going through the foreclosure process if they don't have to. They'd rather work out a situation or a repayment plan that actually works with the client. So having said that, now let's move on. Which local and federal government policies should or will likely be implemented in 2025 to help address housing in BC? Well, I think 2025 in terms of policy, I don't think we're going to see any sort of major policy swings like we've seen with respect to Bill 44 or Bill 46. Those were the major changes. I think we'll see tinkering. I think we'll see policy adjustments to those major bills. But I don't think we're going to see sort of a huge, big swing from where we currently are. One thing I do think has a big potential is if the federal Conservatives get in power, we could see the termination of GST on homes priced under $1 million, and that would be a federal policy. So if that takes place, I think that really helps. That's a big change that could save, people upwards of $50,000 on their purchase price, right? So that's a big deal. In terms of maybe what they should look at, so I think they should repeal this anti-flipping tax immediately. I think it's a very bad decision. And I also think they should reevaluate. I think it's time to reevaluate the property transfer tax rates. They are incredibly burdensome, and the government makes an obscene amount of money on it. And we have really very little evidence that this money comes back to help make housing more affordable. So I would really love to see supply-based incentives coming from either the provincial, municipal, or federal governments that not only help builders and developers, but also that get more density into these neighborhoods that have otherwise been, have gotten so expensive that families can't continue on. So that's what I think needs to happen, and I think what will likely happen.
Good one. I've got a different incentive or policy, and I think it's just so vitally important yet so easy to do with still having government benefit, and that is provide developers low interest construction loans. Right? They already kind of do it for CMH or via CMHC for rental housing, but for end user homes, provide low interest rate construction loans, right? Just charge 1% or whatever that number is. You're still going to get maybe your GST, your PTT, income tax from people that are actually working, you know what I mean? So there's still all sorts of tax incentives that are still being paid, or taxes paid still to the government, but you are incentivizing the developer and helping them in one of their most prohibitive building elements, right? Right now, most developers are pulling back because they can't afford to profit, or they can't make the numbers pencil because the interest rates are so high, their construction loans completely blow out their pro forma. If they had a guaranteed stable rate of interest on construction loans, you would see homes being built at a dramatically increased rate. So that's what I would love to see. And I'm going to say it every year on my predictions until it happens. Okay, well now that's kind of like the main economic drivers that we wanted to focus on for our predictions for 2025. And now we're going to move into the actual sort of housing numbers, right? What's going to happen in GVRD in Greater Vancouver with our real estate data, with our stats moving forward into the year. And the first one that we always start off on is the sales volumes, right? Kind of considered the health of the marketplace. So how will sales volumes compare to 2024? I'm absolutely predicting an uptick in volume. Let's remember the last 2 years have been very slow, 20-25% below long-term averages. And so we have a low benchmark that we're increasing off of, but I do believe we're going to see increased activity levels to the tune of 12% more homes will sell this year than last year. I don't even think that brings us up to long-term averages, but it will be an increase over the last.
Yeah, I that's a little bit more aggressive than I had. I had, again, returning near the long-term averages as well. I had it coming up at 8%. So I'm a little bit, again, I'm watching my optimistic bias, if you will, which I have a tendency for. So, and based on, I do think we're going to see a resurgence. I think we're going to see BC as a province probably finish as in like the top 1 or 2 provinces in the whole country. I think Alberta will probably outpace everybody just because it's a resource-based economy with a lower dollar. I think they'll do very well. But I think BC will be right there behind them because we also have a vast amount of resources that we have access to. And all of that, the sentiment, much like we've talked about in so many different podcasts, the sentiment is what people typically buy on. And if the sentiment continues to improve and rates continue to come down, I do think, Dan, your 12% is definitely achievable. I just think a lot of things have to take place, and I don't know if we could fall into a recession for that to happen. So I'm calling about 8 to maybe I'll get a little bit more optimistic, and I'll go 8 to 9%. Having said that, let's move on now to the sales to active ratio. So this, again, talking about sentiment. Where's the sentiment going to lie? Are we going to be in a buyer's market, a balanced market, or a seller's market? And largely, we ended this year at 18%. A balanced market was probably the story for 2024, largely. I think we'll return to a seller's market in 2025. So much of that might have to do with inventory and obviously how the sentiment goes, but I think we'll end the year somewhere around 22-23% in sales to active ratio.
Okay, interesting. I took a bit of a different approach, but hey, this is great. Good to cover different elements and aspects of the ratio. I went by sort of what percentage of the year is going to be in sellers and what percent is going to end up in buyers or balanced, of course. And so, oh gosh, we know historically the Vancouver market almost never enters a buyer's market, as shocking as that is, but it's the reality. So I said at the end of the year, it's going to be 33% sellers, 66% balanced. So 8 months of balanced, 4 months of seller's market.
Do you think it'll end in a seller's market or end in a buyer's or a balanced market?
It'll end balanced.
Fair.
At 19%.
All right.
Which I didn't plan for, but let's put that one on the board for sure. Okay, a big one. Inventory in 2020. Well, the last 3 2020s have been all about inventory. Inventory has been the story. It's been interesting. It's been very low. It's been spiking higher. And it really kind of, drives obviously the SA ratio, but also people's options and then ultimately prices therein. So we're going to predict sort of the peak inventory number that'll get hit during the year. and then the year average up or down as a percent of last year. So one quick reference or prior to me giving my prediction is that total inventory has not crossed 16,000 going back 11 years now. It was 2014 when we last saw over 16,000 homes in inventory. It's a long time. Now, in 2025, I think it will peak at 15K. And we only saw that number eclipsed once last year. I think inventory is going to be obviously, you heard my prediction earlier, it's going to be elevated, but it's not really going to pass 15K at any month throughout the year. And total inventory, if we were to add month over month over month, the final inventory and divide that out as an average, I think we're going to end up 8% higher than last year.
Cool. I thought we were going to be up about 5% higher than where we were last year, but very similar in terms of total units at 15,000. And the reason I say that is there was a lot of people who came to market this year who didn't sell their property. And I think they're going to try again next year. Is that going to be alongside a bunch of new inventory? I'm not entirely convinced. But with lower interest rates, I think we're going to see higher levels of absorption, but I don't think it'll push price too dramatically. I think we'll see an increase in absorption. I think we'll see an increase in inventory. But with those levels of inventory, I don't think price will get affected too much. We'll get into that afterwards. Okay, so looking at the pre-sale market here. So just pulling this up here excuse me. So we tend to look at the units that were brought to market from the pre-sale side of things, and then we look at what that absorption rate was. So in 2024, developers in BC brought about just over 15,000. I think it was 15,100 and something units that came to market. I do think that we are going to see an increase in pre-sale. I do think it'll come a little bit. I think it'll come up a little bit. I'm looking at about 17,000 units that I think will come to market. There are going to be developers who have already had projects been released, but I do think that there's going to be a lot of carryover because some of those projects have very low absorption rates at the moment, but I do believe that'll get better as interest rates improve, and especially as the economic environment improves down south and we see a bit more growth in GDP. So I think we'll see 17,000 units will come to market, and I think we'll see an absorption rate of about 25 to 30%.
Oh, it's a big range. You're being generous to yourself there.
Okay, I'll tighten it up. 25%. I'm not going to go to the 30. Yeah.
Perfect. All right. So understandably, I mean, it has been an absolutely hostile, brutal environment for developers over the last couple of years, and it's not that much brighter moving forward, especially for those that are sort of the small to mid-size that really can't afford holding costs. But then, of course, the bigger guys, they've got overhead, they've got staff, right? So it's not easy for anybody, but they also, some of them anyway, have deep pockets. That's my long-winded way of saying, I do think after a couple of slower years, similar to Ryan's sentiment, there will be a slight increase in the amount of activity in the pre-sale market. As we know, the immigration numbers are still happening. They're still elevated. We know population is still growing, and ultimately we do need new homes, right? There's still a home shortage. There's still a housing crisis in this country, and some of the developers that will. That's my way of saying I think we're going to see a 10% increase in more units brought to market. Ryan, I just did the math on your 17K. We're the same. We both think 10% increase for next year. And my absorption was a bit higher though. While there's trepidation there, I still think that some quality product is coming to market. We're going to see about 28% absorption by the end of the year.
Price is right.
The price is right. Now, rental rates. And this is an interesting one. And this actually reflects what happens within the pre-sale market a lot as well. Because of course, the majority of pre-sale units are bought by investors, right? They're the ones who are okay to sit and buy a property and put the down payment and wait 3, 4, 5, 6, sometimes 7 years for that property to come to market, right? End users don't wait 5 years for their home to be ready typically. So most pre-sales are bought by people who can afford to speculate. And these are typically investors, whether they're mom and pop or they can afford a bunch, bigger corps, whatever the case may be. And they look at what's happening in the rental market, because when rental rates are skyrocketing like they did through most of COVID, it looked a little bit more appealing to be an investor and buy, let's say, more condos. Because if you can rent a condo, one bed for $3,000 a month, it almost starts to make the numbers work. But then as rental rates go down, these condo investments become less and less attractive. And obviously in 2024, we definitely saw rental rates come down for GVRD. They ended up down around 8% on the year. So what's going to happen moving forward? I think the downward trend is going to continue. And I say that because, of course, we are seeing the population rate decrease pretty dramatically. We're seeing people leave BC. We're seeing less and less jobs in BC. And inflation, of course, will continue to increase, albeit marginally. But things are so incredibly expensive and so unaffordable here that people only have so much money at the end of the day to pay for their shelter costs. And so at the end of the day, end of the year rather, I'm projecting a overall rental rate decrease for GVRD by 4%.
I agree with just about everything you said there. Though I think we might see a little bit of a return to market stabilization with rental rates. I think we've just come off of a fairly steep decline. It very well could continue. I just want to put that out there. But should the economy stabilize in the back half of the year, I also think that will stabilize rental rates. Rental rates are, much like you alluded to, Dan, rental rates are a great indicator as to whether or not we're going into a recession or not. And with an 8% decline, certainly I think that's putting us right on teetering with a recession. And it will really depend on, again, unemployment rates. So I said we're going to be down 2%, not 4%. So that's kind of where I see things right now, ending the rental rates. So anyhow, going to the complete opposite side of the spectrum here, let's have a look at the luxury market here. So last episode, we mentioned that in 2023, there were 86 sales over $7 million. And in 2024, that number was slashed down to 55. So I think we're going to start to see a bit of a return in that marketplace as well. We've seen prices come down dramatically in some areas. And I think there's, relative to your income or your ability to deploy capital, I think there's decent deals in the luxury market space as well. So I think we're going to see, I put a range in here, but I'm just going to pick the number for the sake of it. I think we're going to see 68 luxury sales next year, over $7 million.
Okay, not bad, and fairly close to mine. I put the number at 60 homes, which again, still well under 2023 numbers. And the reason that I think things are going to be lower is the big money, the people who can afford these homes. I mean, most of them aren't primary. These are secondary, even third homes for some people who have homes in other countries. And I think as Canada's taxation has gotten so out of control, it's become less attractive. And I think so we're seeing sort of that luxury money move into more tax favorable countries. So while there's still always going to be interest in the beautiful, West Vans and whatnot of the world, and there will be money that moves in there, it's going to be tough to go back to those the glory days, let's just call them for now. So 60, that's my number for luxury homes over 7 million in 2025. But let's talk about all the other homes in GVRD and the prices, right? The price is a very hard thing to predict. In 2023, we were way too bearish and prices went up way more than we thought. Then the opposite happened last year. We were too bullish and prices went or didn't increase as much as we had predicted. So what happens in 2025 here? I'll just come straight out and share mine. HPI, I think we're in a positive year, but it's a stable year. Nothing exuberant is going to happen and nothing dramatic to the downside is going to happen. What does that mean? Almost at the rate of inflation, I expect the HPI to increase by 3% by the end of 2025. Homes are going to go up 3% on average. And we break these down, of course, by the three different property types, the asset classes that the real estate board shares, which is detached, which I predict doing exactly the same at 3%. Townhomes, they're the darling of 2025, going up a bit more at 4%. And condos will struggle, ultimately ending up almost flat, but I've given them 1% increase on the year.
Wow, we are very similar in our thought patterns here. So I gave an HPI growth for many almost identical reasons at 3%.
Nice.
Yeah. Detached. I see potential in the detached market because it's currently, in terms of, I think it's sitting at 13%. So I think that there's quite a bit of room to grow there. So I'm predicting 3% in detached is what it's going to rise by. Townhomes, I'm a bit more bullish because of affordability, but also because of all the policy that's directing construction at that asset class. So I think it's going to be more like not a whole bunch more, but 5% is what I put mine. And condos, I'm a bit more bullish on condos because I do feel the extreme levels of affordability have not yet been addressed outside of interest rate fluctuations. We haven't seen enough wage growth to really justify huge growth levels in the more expensive property types. But there is a lot of interfamily wealth and generational wealth that's allowing this to take place here. But condos being the most affordable element, the most affordable option, but also the greatest in terms of supply, I think we're going to see 2% growth. Actually, sorry, I had 4% here, but I think that's a bit aggressive, and I'm gonna pull it back to about 2%, mostly because I think people are gonna try and stretch for that townhome. Okay, the last one here. Well, we look at the 5 markets here that are going to outperform the GVRD. So my actual changes my predictions don't actually change a whole bunch from where they were. I think I'm going to leave Whistler out of this one just because it was a scary one for me in the last podcast. It was down 8.5%. It was a big swing in terms of what I thought it was going to do. So I'm staying out of that for my predictions, but I do think Surrey is going to have continued growth, mostly through its infrastructure and a lot through development that is already taken place, that is already under construction. Surrey, I think, will see growth of about 1.5% to 2% above Vancouver. Langley, again, more affordable options for buyers. I'm seeing that one as about 2% growth over the GVRD. New Westminster, I'm going to go back to what I was last year. I think it's on pace. I think it's actually indexed quite well. So that was at 1.4%, and I'm going to stick at 1.4%. Coquitlam, we're going to continue, I think, to see more demand in Coquitlam. It's a great location for detached properties where you can still get a decent-sized lot and a decent-sized home. I think people will chase that in terms of value, so I think we're going to see 2.2% growth in Coquitlam. And Squamish, I think, will become the alternative to North Vancouver, as well as the alternative to Whistler in some instances. So I think we'll still see some decent performance out of Squamish, but not a huge variance, 1.5%.
Okay, this year we only had one area that we both predicted to outperform GVRD, and that was Langley. I also think Langley is seeing tremendous growth. There's a lot of cranes in the sky there, and with the SkyTrain construction well underway, there's going to be continued demand. So I agree with you. Langley should outperform. On top of that, I think Burnaby North, I've said this one year over year. I still believe in it quite wholeheartedly. I think Burnaby North it's a nice livable area. It's going to get a lot of attention thanks to multiplex, and there's going to be some significant growth there. And Mount Pleasant West, the more time I spend in that neighborhood, the more clients I have focusing on that, the more cranes, again, I see up in the sky around that neighborhood. It seems to be just incredibly desirable. And when desire is there, supply and economic elements come into play. So I think that region will outperform as well as the Fraser area or the Fraser Hood. Again, this is by, of course, the GVRD MLS mapping system that we have. The Fraser area, is it's sort of like the next Mount Pleasant, right? Things are getting pulled further and further east, and I think Fraserhood will benefit from that growth. And lastly, I'm going to triple down on my favorite blue chip stock region of Kitsilano. Did a good 8% last year. I doubt it'll do 8 this year, but either way, it should outperform. It just is consistently one of the most sought after areas in Canada to live for many great reasons. And that's what that's why I think it'll do so well again this year. So that's it. That's our predictions. We do our best, but we would also, of course, love to hear your predictions. What's going to happen with Vancouver housing this year? Anything from pricing to supply to listings to outperforming neighborhoods. What do you think is going to happen? It's always an interesting year, and it's always fun to at least guess. But hey, as the year evolves, as we do every single week, we will keep you updated on what is actually happening and what's probably going to happen in the next 1, 2, 3 months, because 12 months is hard as hell to predict. But again, we'd love to do it for entertainment purposes, if nothing else. So thank you, as always, for tuning in. We will be here next week. It is kind of our first official episode of 2025 that isn't prediction or review related. We're going to get into the economics, into the factors, into the data, and see where this world of ours is heading. Thanks as always. Have a great weekend.